Welcome to today's Explainer. We're diving straight into a truly incredible documentary-style story of high finance, unshakable conviction, and honestly, the incredibly fragile nature of human psychology. We're going to be talking about Michael Saylor. This is a man who built a sprawling, multi-billion-dollar empire entirely on the back of a single, uncompromising promise that he would never, ever sell his assets. See, for 5 solid years, Saylor acted as a modern-day prophet for what he loved to call digital energy. He preached this absolute conviction to a fiercely loyal and growing legion of believers, assuring them through every single market up and down that he would hold the line forever. I mean, he famously told his followers, and I quote, "Sell a kidney if you have to, but keep the Bitcoin." He wasn't just buying an asset here. He was selling absolute unbreakable certainty. But then, the absolute unthinkable happens. In this quiet, totally devastating 6-line disclosure filing, Saylor revealed he had actually sold some Bitcoin. Out of a massive corporate treasury holding over 800,000 coins, he had quietly liquidated exactly 32 of them. Just 32. And this right here, this reveals the truly terrifying power of market psychology. Because mathematically speaking, 32 coins is a total rounding error. It means nothing. But psychologically, that tiny sale acted as a spark in a highly nervous market, igniting a brutal sell-off that erased over $100 billion from the total market in just 2 weeks. Just think about the sheer absurdity of this math for a second. On one hand, you have a minuscule $2.5 million transaction. On the other hand, boom, $100 billion completely wiped off the map. To understand exactly why a tiny $1 million sale completely shattered a $60 billion pile of assets, we really have to look past the spreadsheets and investigate the massive psychological dam that Michael Saylor built. So to understand this intense obsession with certainty, we've got to look back. Saylor's quest didn't actually start with crypto. Born into a military family in 1965, he was raised to believe a man is only as good as his word. Now, his lifelong dream was to be an Air Force pilot, but a routine medical exam revealed a faint heart murmur. His own body literally betrayed him, grounding him forever. Driven to find something that wouldn't fail him, he founded the data company MicroStrategy in 1989, and by age 35, he became the richest man in Washington. But unfortunately for him, the betrayals definitely weren't over. In March 2000, right at the peak of the dot-com boom, his company had to admit its earnings numbers were wrong. The very data he built his entire fortune on couldn't be trusted. It led to an $8 million SEC fraud settlement, and in a single afternoon, the market totally turned on him. Saylor lost an astonishing $6 billion. The numbers, much like his own heart, had broken their promise. So for the next 20 years, Saylor basically ran a quiet software business, completely terrified of fragile promises. But then came the 2020 pandemic. Governments started printing trillions, and Saylor realized his company's safe, boring $500 million cash reserve was rapidly bleeding value. He actually described holding cash during this era as standing on a melting ice cube. Honestly, a pretty terrifying spot to be in. He hunted for something that would never, ever let him down. He needed an asset totally immune to human frailty, something where no government could print it, no CEO could magically restate its supply, and no failing heart could betray it. He found his answer in the incorruptible code of Bitcoin, and in August 2020, he completely stunned Wall Street by betting $250 million of his company's treasury on it. Now, Wall Street initially thought he was just gambling, but Saylor, he doubled down. He aggressively borrowed money and sold stock to buy more and more Bitcoin. Almost overnight, his boring, stagnant software company completely transformed into a massive Bitcoin holding vehicle. The stock exploded, shooting from around $130 to over $1,200 in under a year. That's nearly a 10-fold increase. But here, right here, is where the story shifts from finance to psychology. Investors began paying a massive premium for MicroStrategy stock. They were literally paying more for the company than the actual Bitcoin inside it was worth. Why on earth would they do that? Well, it's because of the belief premium. They were buying his absolute conviction. The most valuable thing Michael Saylor owned was no longer the Bitcoin itself, it was his word that he would never sell. And this dynamic created a kind of financial perpetual motion machine underneath it all. Because his stock traded at this huge premium, Saylor could continuously sell new shares for cash and use that cash to acquire even more Bitcoin.
The pile just grew larger and larger per share, and he never had to sell a single coin to do it. It was basically free fuel running entirely on the engine of belief.
But as is often the case, he wanted even more fuel. To supercharge this machine, he began issuing preferred stock, which is essentially a permanent IOU. He raised over $15 billion this way to buy even more Bitcoin. But this mountain of debt came with an incredibly unyielding consequence, a towering $1.5 billion annual dividend bill that had to be paid every single year, no matter what the market was doing. Of course, not everyone was buying into the hype. Legendary short seller Jim Chanos, the guy who famously called the Enron collapse, recognized the extreme fragility of this towering structure. Chanos bluntly pointed out that investors were paying a completely irrational premium. He bet against the stock, wagering that this massive gap, a gap made entirely of pure intangible belief, would eventually have to close. Let's fast forward a bit to late 2025, where this fragile structure faces its ultimate crisis. In October 2025, Bitcoin hits an all-time high of $126,000. Saylor looks like an absolute genius. But then, a sudden global tariff shock sends the broader markets into a sheer panic. Money flees. Bitcoin suffers a record run of withdrawals, bleeding heavily and sliding back down towards $60,000 by early 2026. And during a May 2026 earnings call, when asked how he'd pay his massive dividends without the premium, the man who said never finally uttered the word, probably. Saylor's financial machine officially became a slow-motion disaster. With Bitcoin tumbling, the company posted staggering losses of over $12 billion in a single quarter. That crucial belief premium collapsed entirely. Suddenly, he couldn't just issue more stock to easily pay that massive $1.5 billion dividend. The easy way out was totally gone. To put this into perspective, think of this entire structural marvel as a massive dam. The billions of dollars of investor capital, the leveraged debt, and that relentless $1.5 billion annual dividend bill, that's the water pressing against the wall. And the only concrete holding all of that crushing pressure back is just one single word, never. So, faced with massive bills he absolutely had to pay in late May 2026, Saylor finally cracked the dam. He quietly sold those 32 coins. Now, out of an ocean of nearly 800,000 coins, 32 is mathematically insignificant. It is quite literally a single drop of water escaping a giant dam. But when that June 1st disclosure hit the public, two completely contrasting realities emerged. If you look at it logically, as a cold financial measure, the company was perfectly fine. Selling a fraction of an asset to pay a bill is completely rational treasury management. But structurally, the absolute belief that held up this multi-billion-dollar cathedral was shattered into a million pieces. Because the market suddenly realized the promise was never absolute. And hey, if the promise wasn't absolute, the premium wasn't safe. So the investors ran. Within a single hour, $93 million in bets were wiped out. Over the next 2 weeks, a staggering $4 billion flooded out of Bitcoin funds. The dam didn't burst because of the water. It burst because the market realized the concrete was just an illusion. It's honestly a profound irony. Think about it. Michael Saylor spent 20 years searching for incorruptible code to escape the pain of broken promises, from his own physical heart failing him to his company's numbers deceiving him. Yet he built his ultimate empire by making his own fragile human word the single load-bearing pillar that could, and ultimately did, fail. This collision of high finance and human psychology is just brutal, and it leaves us with one final fascinating thought. Now that everyone downstream has seen that microscopic crack in the dam, now that they know the prophet is really just a man, can a broken promise ever hold back the water again? Keep that question in mind as you watch the markets moving forward. Thanks so much for joining me on this explainer today, and I'll see you next time.